Alrighty, folks, who wants some good news? I have good news. I have lots of good news for several stocks out there, and we got to get into this in this video here today, okay? Appreciate y'all joining me. Elf Beauty. If there's any Elf shareholders in the house, I have some good news for you guys here today. Elf Beauty closing over $130 a share, up 3.6% here today. I have some good news for Celsius shareholders, some very good news. Obviously, Celsius stock has been red hot now. We're up $146,000 on the stock, up 150% on a relatively new investment. I have some really good news in regards to Celsius. Meta, oh my gosh, could we get any more good news in regards to Meta? Up $994,000 on the stock in the public account. I have some good news if there's anybody out there that owns some Meta shares. So we're going to get into all that at the top of this video here today. After we get done going through that, we're going to react to this video here from the Professor Jeremy Siegel. Looking forward to sharing my thoughts and opinions on that one. Google McDougal obviously moving huge. Oh man, some good news in regards to Google, and I want to share my opinions on what to do with Google now at this point in time. I posted this on my X page here today. If you ever want to follow me on X, by the way, that's always linked in the description area of all my videos, but I posted this on X today. I said, Google shareholders, what's the plan? Buy more, sell some, sell all, or just hold? What do you think is the best play with Google stock right now? So we'll speak about that in this video here today, and then after I share my opinion perspectives, I want to hear the Wall Streeters' opinions and perspectives. We'll see if they get into a fight. They got the fighting crew up here, so we'll see what happens there. Okay, appreciate y'all for joining me as always. If you haven't already done so and you're new here, please smash a like button. That is what all the OGs do, and I appreciate all the OGs for being here. You guys already know. You don't even have to be told to smash a like button. It's only the new people, okay? For the new people in the back, make sure you hit that like button. I appreciate y'all for being here as always. Additionally, if you want to be subscribed to the channel, you can certainly subscribe. I think we're at, how many subscribers are we at now? 107,000, I believe, here on the Reaction channel. So appreciate each and every one of you for being here. If you need access to all my premium courses, access to my private Discord chat, access to see the stocks I'm buying and selling each week in my $3 million plus Fidelity account, access to 1000xstocks.com, you want to become a great investor, all that good stuff, pinned comment down there, click on that, fill out a form. Let's see if we can get you inside my private stock group, okay? Alrighty, guys, so here we go. Good news in regards to ELF. Well, this might not be good news, might look like bad news, but I'll explain why this is good news, okay? So Deutsche Bank came out here in the past 24 hours or so, and they downgraded ELF from a buy to a hold. Now, they also raised their price target, which is interesting because the price target is technically lower than where the stock's trading at right now, but they raised this price target, but yet they downgrade the stock. Interesting. So that's a whole situation, okay? Now, they believe it has limited upside. As far as catalysts, they say continued expansion for ELF and Road product lines, strong medium-term top line and profit growth opportunities. Overseas growth runway remains intact. True. They say risk factors, valuation concerns, 35 times next 12 months consensus earnings. So basically, this is a call around valuation. The stock's rallied a lot. They say shares have already rallied 25% since early August, reducing upside, they said. They're neutral. Optimism on growth remains, but valuation ceiling tempers conviction. Analyst comments, they say ELF shares have appreciated about 25% since early August, surpassing the $121 price target. As such, we move back to the sidelines today and downgrade the shares to hold, even as our price target rises to $128 on a roll forward in time and continued general optimism around the medium-term top-line profit growth opportunities. We continue to see room for sizable expansion across both the ELF and Road product lines, particularly overseas. However, at current valuation, nearly 35 times next 12 months consensus earnings and 20 times next 12 months consensus EBITDA, earnings before interest, taxes, depreciation, and amortization, we are held back. Now, the reason this is good news here in regards to ELF, okay, is analysts goes more bearish on, they're not bearish on ELF, right? They're going neutral. They're just like, I'm not bullish, I'm not bearish, we're just in the middle now. The great news about somebody like Deutsche Bank coming out and saying that is twofold. One is, what happened to the stock here today? Up very nicely, closing at $130 plus, which is one of its highest closing prices of this entire year. So basically, investors said, okay, cool, we're buying, right? Now, the other important thing I think about this is, it's almost impossible to be bearish on ELF now at this point in time. Now that you know the growth rates are about to skyrocket back up again, right? Now that we have the worst of the tariff fear out of the way, it's nearly impossible to be bearish on ELF. And this stock has a runway to 200 plus again. It's just a question of how long does it take to get there? 6 months, 12 months, or 18 months? That's really the only question. The stock's headed to 200, but does it happen the next 6 months, the next 12 months, or the next 18 months? That's really the only question at this point in time, at least in my opinion, right? It's going to head back to all-time highs, which all-time highs for ELF were around I think they're around 210, 212, something like that, right? We're headed back there. So ELF has a lot of, I guess you'd say, really exciting times ahead, and this shows that analysts can come out and, they're like, they kind of brush it off, okay? Now, what about Celsius? What's the good news in regards to Celsius? Wow. PepsiCo and Celsius confirmed strengthening of their strategic partnership on Friday. Under the new agreement, Celsius and Alani Nu brand will be distributed through PepsiCo U.S. and Canadian distribution network to greatly expand the rising brand's retail presence and reach new demographics. Okay, that in itself is huge. Okay, Alani is a brand that just got acquired by Celsius not very long ago. Alani has unbelievable growth. And now Alani's going to get into the PepsiCo distribution. Now, what happened to Celsius when they got into the Pepsi distribution is Celsius's revenue took off like a rocket ship. Then about a year to a year and a half after that deal went through, then Celsius kind of had a come down of the growth rates. Now, my opinion on this is PepsiCo won't over order like they did on Celsius. So I don't think we'll have to deal with it as big of a problem. But the moral of the story is here, folks. Alani's revenue growth is going to be outstanding for a long time. And when I say a long time, I'm talking really like at least like the next 2 years. Because Alani's already a brand that's got strong growth without the Pepsi deal. Now you're going to put the Pepsi deal under it, and a lot of this distribution will take place in 26. Some will take place here in 25, but a lot of it's going to take place next year in 26 as store resets come and all that sort of stuff happens. And so just understand, Celsius's revenue growth is going to be incredibly strong for quite a while. Quite a while. Like maybe we have some sort of come down in 27 or 28. That's a potential, but it's going to be a while in regards to that. Celsius's revenue growth. Celsius's revenue growth rates in 2026, folks. I mean, whoa. Like we're going to be talking about I think there's going to be some quarters that revenue growth is up well over 100%. Because you're going to have easy comps. Celsius numbers should be up on a year-over-year basis in 26. You have the Alani deal, and now you have the next part we're getting into. Simultaneously, Celsius has acquired U.S. and Canadian rights to Rockstar Energy brand from PepsiCo, which will add classic energy drink offering to the company's portfolio and potentially appeal to a wider consumer base. PepsiCo retains ownership of Rockstar Energy internationally and will continue to distribute it domestically for Celsius Holdings, which is a very interesting deal that, they're still going to retain their ownership of Rockstar internationally, right? So intriguing. Now, Rockstar, what I can tell you about that brand is that brand was really a direct competitor against Monster traditionally. I can also tell you when I worked at Quick Trip and I was a lot more into the nitty gritty and I was able to see the numbers of, what stores were selling how much and all those sorts of things. Rockstar was always a strong number 3 player. But keep in mind, this is like 10 plus years ago. I worked at Quick Trip, okay? And I was a manager and whatnot, and I got to see all the numbers that, every single SKU was selling in the stores and things like that, okay? So it's been a long time. But back then, Rockstar was a really strong number 3. Now, PepsiCo bought Rockstar for a ridiculous sum of money a few years ago. I think it was back in 2020. And it looks like PepsiCo kind of crashed and burned it. They don't, PepsiCo's got so many brands, so much going on. It looks like they just kind of failed Rockstar, and Rockstar has been in kind of a tougher place. So maybe Celsius will be able to get things rolling there, right? As part of the transaction, PepsiCo has invested $585 million in newly issued Celsius convertible preferred stock and increased its stake to approximately 11% on a converted basis. PepsiCo will also appoint an additional director to Celsius's board. Going forward, Celsius Holdings will take on key strategic role of energy lead for PepsiCo in the U.S., overseeing strategy for Celsius, Alani Nu, Rockstar, while PepsiCo handles distribution. Now, this is huge, folks, okay? If we want to call the original investment like a teaser investment of like PepsiCo and Celsius getting into bed, this is like we're married. This is marriage at this point in time for PepsiCo and Celsius. And what this means for Celsius is now they have, the number 2 most important drink company in the world fully aligned with them. Now that PepsiCo has a 10% plus ownership stake of Celsius. And now no longer is PepsiCo a competitor to Celsius. Now that Celsius is going to have Rockstar Energy in the United States and Canada. So there's no reason for PepsiCo to even try to compete now. They just want to try to grow Celsius as big as possible so they can grow that ownership stake in Celsius as big as possible. I mean, I'm sure PepsiCo would love it if, we could talk about Celsius someday being a $50 billion or $100 billion market cap. That'd be a great thing. Because if you run the math on that, and they've got a little over 10%, 11% of, the stock, I mean, we could be talking about PepsiCo's stake in Celsius could end up being, if it was a $50 billion company, we're talking about, a $5 billion plus stake at that point in time on a relatively small investment, right? Additionally, we could talk about if Celsius builds their business over the, I'm sure in the 2030s, Celsius will start paying some sort of big dividend to all its shareholders. That's my hunch on that. Like, they're just going to be focused on growth here for the remainder of the 2020s. 2030s, we'll be talking about this as a dividend company. And then if you think about PepsiCo having 11% of the shares, well, shoot, there's a whole lot of dividend money PepsiCo could start bringing in, right? So that's always a potential there. And I mean, to think about this even deeper, as Celsius's cash flows build up as the years go on, my guess is Celsius will also probably buy back shares. So if PepsiCo has 11% ownership now, and Celsius buys back tons of shares over the next 5-10 years, they're not going to buy back any meaningful shares in the short term because they're so focused on ridiculous growth. But I wouldn't be surprised if all of a sudden 2028, 2029, 2030, you start hearing about big share buybacks. Well, PepsiCo's ownership, if PepsiCo doesn't sell and Celsius starts a massive buyback, that ownership stake could go to 12%, 15%, 20% for Pepsi over the long term, which, once again, if Celsius becomes a drink giant, a $50 billion or $100 billion market cap, my gosh. And the dividends, we could be talking about Celsius pays out at that particular time. And then for Pepsi, you also have the potential of maybe you sell off the position long term, right? Like, I don't know, we'll see what happens there, but I think it makes sense from PepsiCo's perspective, and I think really truly the one that gets the best deal of it. And obviously PepsiCo gets to make money off the distribution as well, so do keep that in mind. But I honestly think the one that's getting if you had to say who's the absolute biggest winner, I honestly think Celsius is even a bigger winner here than PepsiCo. Like, both sides should win in this situation, but I think Celsius is the bigger winner. Winner, chicken dinner. Stepping into the role of PepsiCo's strategic energy drink captain in the U.S. is expected to be a pivotal milestone in our journey to shape the future of modern energy and grow our brands with leading beverage distribution system, stated John Findlay, the CEO of Celsius. This agreement marks the next step in PepsiCo's reshaping its brand portfolio to position us for the long term, said the CEO of PepsiCo's Beverage US. Energy is an important growth category, and we believe this move with our partner Celsius creates meaningful multi-brand energy portfolio that better positions us to serve the customer needs, right? You got to understand here, okay, PepsiCo and Coca-Cola, they both failed miserably. Miserably. Not a lot of people know this. Coca-Cola and Pepsi both did what? They both tried to be successful in the energy drink category, and they both failed miserably. They fell flat on their face. They tried, and they tried, and they tried for the last 20 years, and they could not do it. So finally, Coca-Cola years ago threw in the cards and said, the hell with this. let's just buy an ownership stake in Monster, MNST, an old stock of mine, right? I owned it before it was even called Monster Corporation. I owned it way back when it was called Hanson's Natural Beverage. That's how OG I was as an investor in that company back in the day. And that's been incredibly successful for Coca-Cola and successful for Monster as well. And so PepsiCo realizes we failed. We failed miserably. We've tried to launch so many brands, they all failed. We try to Mountain Dew Energy, all this different stuff. We try to buy Rockstar, we can't do it. And so they realize, let's let the next energy drink giant go ahead and do it for us. Let's take an ownership stake in them. That way we capture the success of it. Because you got to be really into the weeds to really be successful at this. And PepsiCo and Coca-Cola aren't. Those companies understand the soda game, but they do not understand energy drinks. They don't understand the marketing behind that. You got to really be into it, man. You got to understand social media on a high level and things like that, right? So, now, in regards to market share for Rockstar, it looks like it's around a 2% market share, somewhere around there, roughly, which if you combine Celsius, Alani, and Rockstar, they should end up having about 20% market share, which is going to be a very strong combined company. Now, keep in mind, as Alani gets more distribution, right, we could be talking about, well over 20% market share of this total company if we talk about it a year or two in advance. Additionally, if Celsius can revive the Rockstar brand, hey, then we're really talking. Then we could be talking about maybe market share pushes closer to 25%. That would be pretty darn exciting, right? So, yeah, Celsius shareholders, I mean, it's a fun ride. It's a fun stock. And I mean, the growth rates are just going to be astronomical. I hope everybody's ready to get their flapjacks flipped on those growth rates. And I mean, after seeing this deal go through, where do I think the stock's headed? Listen, this stock's taking out all-time highs. And I think it's taking out all-time highs in the next, probably 9 months. And I think that probably regardless of where the stock market goes. Now, am I going to play call options on Celsius in the short term? And, no. But, I really think Celsius is probably going to boom over this next 9 months. As people start to see these numbers roll through, oh my gosh. You got to understand, people are investing in companies like Elf and Celsius for what? The revenue growth. That's why they're in those stocks, right? And there will be a day, it's in the 2030s, when Elf and Celsius, it's not about the revenue growth, it's about the margins, it's about the profitability. But for right now, people just want to grow that top line. That's why you invest into an Elf, that's why you invest in a Celsius, and both those companies are about to come through and just absolutely smash it. Whew. So get ready, folks. Fun times ahead, and Celsius will be at new all-time highs before you know it, okay? Alrighty, next one up here. Meta has some really good news, okay? So everybody has seen, obviously, the whole Google situation, right? And we'll talk more about the Google situation in a moment. But this is a huge deal for Meta. And the reason being is there was a fear that maybe the government could try to break up Facebook from Instagram, from WhatsApp, things like that. After this, there's basically no fear for the stock now at this point in time. Any of that, in my opinion, that was a rational fear, but it was fear out there. Oh, maybe they're going to force Meta and Instagram to break up, or them to break up WhatsApp from it. Nah, it's not happening, okay? And so this stock has a clear runway to $1,000 plus, in my opinion. I think analyst EPS estimates are way too low on this stock. I looked at analyst estimates for what they have for this next year, and I'm like, it doesn't make any sense to me. It's not like Meta's going through some insane hiring spree right now. They're spending a ton on CapEx, but that's not hitting their net income and their EPS. So I think analysts are way too low in their EPS and net income expectations for Meta here. And I think the stock's running to $1,000. My only question is, does Meta hit 1,000 this year, or does it hit next year? My question isn't, does it hit 1,000? It's is it going to hit this year, or is it going to hit next year? That's really the only question in regards to Meta. So, yeah, this news, and it's also good news for other big tech as well, but specifically Meta, because that was one that was getting brought up in this whole situation, okay? Alrighty, time to get in the Professor Jeremy Siegel.
And Professor Emeritus of Finance at University of Pennsylvania's Wharton School of Business. And Jeremy, we're down on this first trading day of September.
Jeremy.
Probably because of questions about the tariffs, but I don't know. We're also at relatively high levels. How are you feeling about things right now?
Yeah, and probably because of September,
Right.
being historically really the worst month of the year. Listen, certainly we could have a pullback. I mean, I still think the bull trends are intact. I know you guys mentioned the Wall Street Journal article this morning about all-time high, so I took it out and read it, and it said, oh, yeah, it's all-time highs relative to sales. Well, I thought we, value stocks on earnings, not sales. And
Right.
We're way, below any all-time high in terms of earnings. Not that it's not an expensive market, but once you take out, and even that article admitted, once you take out the Mag 7, we're only, slightly above a longer-term medium. So I still think this bull run has a place to go. Revisions are still upward. I mean, there's a lot of things that can derail it. I mean, the tariff development is very interesting because I think it's going to go to the Supreme Court, and I think the Supreme Court's going to throw it back to Congress and say, have the Republican Congress say okay, and then it'll go through, and that's going to be very interesting politics, I think, in the second half of this year.
It's just the Senate.
The death of bull markets has been greatly exaggerated. The thing you got to understand about the end of a bull market and how do you actually get a bear market to start? And, bear market, people categorize it different ways. The bottom line is like a market that the overall trend is down for like at least 6+ months, right? How do you get that to happen? I'll tell you how. Something monumental has to happen. It can't be a small, like, oh, this will, no. It has to be huge. So for instance, how did you break the bull trend back in 2007? We had the starting of the great financial crisis, right? The banking system nearly collapses, massive economy, housing market crash, all those sorts of things. Okay, boom, you got to break a bull trend. Then we had a massive bull trend again for a long time. Now we had corrections along the way, some little short-term crashes, things like that, but nothing crazy. We never really had a bear market from basically coming out of that great financial crisis all the way to 2020. How did you break that bull trend? A once-in-a-100-year health event. Boom. Trend broken, right? Bear market. All right, next up. Get back into a bull trend. How do you break that bull trend? 2022, inflation at the highest rate it's been at in decades and decades and decades. So it has to be something comes out of nowhere that people didn't really see coming, and it really creates massive ripple effects across the financial markets, across the economy, across consumers, things like that. It can't be something that's known. So for instance, like people look at like the national debt and they're like, oh, that's going to be like everybody and their grandma's known about the national debt for like 50 years now, 60 years, 70 years. They've been talking about that for the longest time. Think the national debt is like a new subject? No, it's not new. It's higher than it's ever been. And guess what? It's going to be higher than it's ever been next year and 10 years and 5 years and 15 years from now. Like, that's just the way it is. So it has to be something comes out of nowhere and it creates a overall big bear trend. And that's how you break a bull trend. And really cause a true like bear market that downtrends significantly for quite some time.
I think that's going to be a really interesting sort of development.
Yeah, I mean, he has control. The party has control of the Senate, of the Congress. We'll see if they would choose to fight him on that or whether they'd say, okay, we go along with what we've seen to this point. But I want to go back to what you just said, this idea that we're at the highest level if you divide by sales. I mean, we mock people when they look at sales. We say that's not the real number. You're right. If we're looking at earnings, that seems like the much more important number to bear out.
And the biggest companies you're talking about, the Mag 7, are the richest in terms of price to sales probably, too, because of all the potential.
And it's because the margins of those companies are so high. Margins of digital tech companies have always been the highest. So if they're predominant, you're going to get a result such as this. And I think that's built into tech. Tech has very, very high margins because of the way accounting goes and the way globalization and how you can replicate with no cost. All you need is those customers to come. So it's a very different sort of a thing than looking back at a steel company or an auto company. And to put them all together, I think gives a misleading look at the market.
So you're feeling pretty good about things, even though you look at the calendar and see it's September.
Yeah,
And
I mean, again, I wouldn't be surprised. And short run forecasting is hard, but the upward revision of earnings, after it took the hit in April, and we still have to see. I mean, there's a big dispersion. I think one of the biggest dispersions I've seen in GDP for this quarter. I mean, it's true that the Atlanta Fed is looking like 3.5. It sort of shocked me. I think Goldman's still looking at 1.5. JP Morgan is sort of in the middle at 2.5. And I've never seen such a dispersion. We're more than 2/3 of the way through the quarter, outside of recession periods, which of course are very different. So I think there's still a lot of questions. Not all those price increases are yet recorded. What is going to happen in the second half of the year? I think that's really the biggest question. And that, of course, is still linked with the tariff question of the legality and how it's going to flow through to the consumer.
so obviously a lot of questions, but you're still feeling pretty good. And I think we'll take it at that, Professor.
I'm still positive on the market at this time. Of course, any sort of developments could come that could change that, but what I see is still constructive, very constructive.
Alrighty, so next up here, Google McDougal. So I posted this on my X page once again. That's always linked in the description if you guys ever want to follow me on X. But Google, obviously big move here today, up significantly and that stock has gone up quite a bit very rapidly for me because that was a buy back April 23rd. So that was 5 months ago or so, or somewhere around there roughly, right? And, to already be sitting on a 47% gain is pretty significant on a stock like Google. But my feeling on Google is I think it's a hold right now. And I think it's also a buy. Like I won't buy any more in the public account, but I wouldn't mind buying some more in my Patreon portfolio to build that position bigger. And the reason being is you look even after today, forward P, let's call it Do 22. If you compare it versus its peers, which you're going to compare somebody like Google against Apple and against Meta, why doesn't it deserve a 22? Why doesn't it deserve actually a much higher number than that? If you look at Apple trades 31. Meta trades around 26. Now you say Meta's got likely better revenue growth going forward, and it's had better revenue growth in the past. So Meta likely deserves a premium over Google. Apple trades at 31, and Apple actually has significantly lower revenue growth than Google McDougal. And I think also, I just think like Google's more well positioned for the next 10, 20 years than Apple is. So if anything, I think Google should get a rating higher than Apple. Or you could make a case that maybe Apple should come down a bit and Google should go up some. So I view the stock as either a buy or a hold right now. I actually don't think it's a sell. I don't think it's, to sell Google now, it just doesn't make a lot of sense to me, at least in my personal opinion. But let's hear from the Wall Streeters on what they have to say.
39.5% since the so-called Eddie Q sell-off. That was May 7th. You said everybody pipe down. Relax. The stock is just fine. The company's just fine. Now what you say, my friend?
Now I say it's still undervalued, and a meaningful overhang has been taken out of the name. You never know what's going to happen with these things. The judge can go any way they want to. But the idea that we would be talking in May, as you referred to, Scott, about competition eating Google's lunch, and at the same time that this judge would rule that there's a monopolistic practice here at Google, well, that was the ruling, but that the punishment would be draconian to reflect that monopoly, that was completely incongruous. You can't hold those two thoughts together. So although it was not a fait accompli, I'm very delighted. This is the news I expected. And now the overhang's gone. And what you've got is a stock that's trading at the low 20s. I think it's about 22 times forward earnings. You compare that to the rest of the Mag 7. And like the rest of the Mag 7, this is going to be an AI beneficiary. Yes, there is competition. But this is Google, a multi-trillion-dollar company that has been at AI for a long, long time. People don't remember that, but it's been at this for decades, and they have a viable product. That's showing up, by the way, in their quarterly results, which I expect will again be the case in the quarter to come.
You catch a fair amount of grief from the bench, and now you get some love. Because, you told people to just chill, relax, don't make such a huge deal of the Eddie Q thing, even though it's not like it's an insignificant point that he was making. It's just the stock's up a lot, and this is a big deal. 9 target hikes at least that we could find today. What do you think about this? I'd like Jimmy declared this, even with the gain, still undervalued. Well, if you look at mega cap valuations, it certainly has a lower forward PE than the others. Did we make that up? Let's show it if we have that. Because Amazon's like at 32 plus times, as is Microsoft. Alphabet's at 21.3 times. Maybe it's a little more now because of the gain that you're getting in the stock today, but nonetheless, does this start to close? Does this closure, if you consider it that, close the gap from a valuation standpoint between Alphabet and some of these other names?
Jimmy nailed it. Yeah, this is removing a significant obstacle, and I agree with you. I believe there's further upside potential here. When you look at the sum of the parts, you look at the various businesses and the valuation here, one can think about this company trading with a market cap exceeding $3 trillion very easily. Just thinking about the combination of a very powerful Waymo business, YouTube TV, the cloud business we know is doing well. And when you think about the valuation of OpenAI, how that has grown so dramatically to over $500 billion, what does that mean now for the valuation of Gemini and for Google Cloud itself? So it lifts the obstacle. It absolutely is a clearing event. And
the most compelling thing about Google, right? You just spoke about OpenAI raised, I think it was today, at like a $500 billion market cap. The most interesting thing is Google has only seen the bad side of AI so far in regards to the stock price. Everybody's always like, oh, so scared, like it's going to be disrupted, blah, 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 blah. So all they've had is negative effects so far to the valuation in regards to AI. Meanwhile, they're likely going to end up being a big beneficiary of AI. So what happens when we flip from this negative stance into more of a neutral stance and then into a bullish stance around Google? And what's going to happen to its valuation then? Think about that for a moment. I think that's very, very meaningful.
I also think it benefits the entirety of the AI halo because it gives now Google the opportunity to go out and actually spend more. Google doesn't have to sit back and concern itself with these antitrust fights.
I'll tell you what, this is an antitrust issue, quite obviously. It doesn't eliminate the broader question, like the one that Eddie Q raised in the courtroom, of whether these large language models and these co-pilots and generative AI deals are going to cut into the monopoly that they all but had in search. This does nothing to address that, does it?
That's fair, but it does allow them the opportunity for a very cash-rich company to go out and actually spend and defend against that loss of market share that potentially is coming. So
you're pointing out something very important. This is a huge company. The huge companies in any industries win by virtue of their size, by virtue of the resources, whether it's financial, as you're pointing out, or as intellectual, as I was pointing out before. I think this is very important. This is why I was so calm on the Eddie Q comments. It's a $2 trillion company. Now, I was surprised that it became a battleground stock. This was one of the more calm moments that I've had when defending a stock because of the size, which you're speaking to, Joe.
Weiss, you own it too, obviously. Do you think it's a value? You start to close the valuation gap now?
I think you can close it somewhat more, but I don't think you'll close it completely. This stock is always sold at a discount, or generally. I don't want to say always, because that's just too strong a term. But it's generally sold at a discount over the last 5-10 years to some of the others, including Amazon. But here's what it also does, which I'm not aware that most are talking about. Gmail, Google Mail, is the dominant player in mail in the U.S., in email. Without the microscope on them for anti-competitive activity, they can do what Netflix has been doing. Now, they've raised prices somewhat, but they can raise prices more now without the glare of antitrust proceedings on them. So I think there are multiple levers they can pull to drive revenue, to drive earnings, and I look forward to them doing that. But you know, I've thought about this quite a bit. Is that how much of that headwind from the antitrust we're seeing was still in play? I mean, the stocks recovered from 165 to 200 before this, so you got to believe some of it was discounted. Now, when it was at 165, everybody
Look at the
crushed.
move in the stock today. It would say that
No, I'd say some of it has
the
been
market
discounted.
maybe didn't expect this outcome.
No, clearly it didn't. Clearly didn't. But you still have the headwind of search share and of giving up some of their data.
I know, but the whole point is that maybe all of that was overblown.
No, and I think it was by today, but what I'm saying is that's the reason why it won't recover, or it won't go to the extent on a multiple basis that you see Meta and Amazon and others at. So that's my point. You'll continue to see it move up. And I think the headwind of losing position in search is overstated, because they'll still be the one to dominate advertising just because of their share they'll have. So I like it. I'm staying there. I debate about buying some more when the announcement hit, but I choose to wait for it to pull back a little bit because I think that's what will happen.
Liz, I'll make this quick. Meta is, you mentioned it, it's the direct comparable here in terms of what the stock does next. 2 years ago, Meta was trading at a high teens forward multiple. Many people, and I think it was you, Steve, it wasn't me, bought the stock at that point in time and have enjoyed both a multiple expansion and earnings growth. And that's exactly what I think you're going to see with Google over the next year to 2 years.
Aren't you talking about, you're talking about a stock move, but you're talking about apples and oranges in terms of issues.
You're correct. You're correct. I'm talking about a stock move in terms of what to expect. You're absolutely. There are some similarities. I mean, Steve was just bringing up email. Well, let me extend this, because Steve was just bringing up email. It's only one piston in the engine. There is YouTube, which I would say is a direct comparable to what's going on at Facebook. But yes, Scott, there was the year of building out the metaverse, followed by the year of efficiency. I'll grant you. I'm simply saying, from a stock point of view, absolutely Meta is the comparable in my mind.
So, Liz, you look at this trade lately, which has been somewhat in question as you head into a new month. This is just what the doctor ordered. If you can remove some sort of regulatory and antitrust overhang over the space, what's that do?
I mean, it certainly helps. It removes one of the skepticisms that people might have had about current valuation levels. I think we're talking about some idiosyncratic issues with one stock, though. But when you look at the trade itself, if we're just talking about mega cap tech, or even if we're just talking about semiconductors and everything that has been under pressure over the last, call it 5 trading days or so, you can't remove the fact that what's happening in the rest of the market, especially with yields, is probably pressuring them as well. And I talk about the relationship between assets a lot. This is a relationship that I think right now is intact. You've got long-term yields rising and long-duration stocks under pressure. That makes sense. This could be a period of time where we're just sort of normalizing to a level of yields that needs to be more rational given the environment, a level of inflation that's perhaps digested by the economy.
Listen, these big techs are benefiting massively by what? By what's going on in the yield market right now, right? We know these big tech companies are loaded to the sky with cash, which if you're able to buy treasuries with all that cash, right, you're able to earn a very nice yield there. We also know many of these big techs have very low debt levels or no debt, some of them, right? Which means, they're not really affected by higher interest rates. Higher interest rates are actually a net huge benefit for these companies. Where the same can't be said for all companies out there, right? So that's just a little factor to keep in mind in regards to the subject, okay? Appreciate everybody joining me as always. Thanks so much for being here. For those of you that are looking to get access to my entire library of premium courses, like Become a Master Stock Market course, Millionaire Playbook, Stock Options Mastery, Dividend Investing Mastery, Financial Statements Mastery, my Valuation Mastery, teaching you how to properly value stocks, right? If you're looking to access exclusive weekly videos from me, my private account or my public account, which is a $3 million plus fidelity account, as well as 1000xstocks.com if you want access to all that good stuff. Pin comment down there, click on that, fill out a form. Let's see if we can get you up to a higher level than where you're at. Much love and have a great day.